Hey everyone, it's Mike from Orderflows, and today is August 10th, 2018. This is a quick video I'm shooting on the Orderflows market analysis for this Friday, August 10th. And it was an interesting week. Earlier this week we just started our weekly Orderflows group training session, group live training session with me. It meets Monday nights at 7 p.m. Central Time, and it's a weekly thing. They'll be recorded and they're put in a special archive section in the members area. So you just go in and I'm going to try and create a video to show you how to get to it. It's not a simple thing where it says archive section here. You got to go to manage recordings and stuff like that. But I'm going to try and teach you how to get to that. So before I jump into the analysis I want to do today, I just go through a brief disclaimer. This presentation is for educational and informational purposes only, should not be considered a solicitation to buy or sell a futures contract or make any other type of investment decision. Futures trading contains substantial risk and is not for every investor. Investor could potentially lose all or more than the initial investment. Risk capital is money that could be lost without jeopardizing one's financial security or lifestyle. Only risk capital should be used for trading. Only those with sufficient risk capital should consider trading. Past performance is not necessarily indicative of future results. Now, the reason why I put that there is because, people sometimes think that, trading is easy and, it's the way to riches. Can you make a good living trading? Yes, you can. I know a lot of people that's what they do for a living is they trade. That's how they make their money. That's what I have been doing for the last 20 years. I've been involved in the markets, as a trader. And more recently as someone that works with other traders, people always say, hey Mike, you're such a good trader, you come off as, oh, you're some market wizard. No, I don't. I come off as somebody who has 20 years experience trading at a very high level. I'm not going to say the highest level, but I spent 8 years at JP Morgan. I spent 4 years at Cargill, 3 years at Commerce Bank, a few years at EDF Man. So you don't survive that long in a trading environment unless you're decent at it. I'm not saying you got to be great at it, but you got to be decent at it to survive. But anyway, one of the things that I want to talk about is the some trade setups. And I've always talked about certain trade setups, going back years, and one of them is the ratio and divergence in the order flow, right? Divergence is the new or equal low with positive delta or new equal high with negative delta. But what makes my order flows divergence is, I include a little bit of price action into it, because, just because you make a new low with positive delta, I want the market to be confirming it with the price action as well. So rather, it's funny, a side note is, a buddy of mine who's, really into order flow. He consumes everything that comes out on order flow, and he says he met this guy who had this quote secret to order flow analysis secret, and share it with you for a couple $100s. Okay, so my buddy sent him the couple $100, and basically all it was just divergence. He said you buy it when you get a low and you got positive delta. Like he's like whispering it like that, like it's some secret. It's not. This is something that's been around for many years, and the problem that I've always had with the normal divergence is, on a market that's trending, you're going to get, new lows with positive deltas. And I always say you got to add some price action to it. You need some confirmation in the price action that, hey, we are starting to move up from that low. And that's what my order flows trader software does, is it adds price action into the normal divergence. And the trade setup that I've always been talking about for years since I released my software was the ratio, which is this blue number. It's a blue ratio, is a ratio that I like. I find in the order flow being either supportive or indicative of price rejection. So it's either price support or price rejection, depending on how the number comes out. And if it's just a black number, that's just your regular order flow, okay? And the setup that I like, that I've been talking about for years, is this one, the ratio and divergence in the same bar, or divergence and in the following bar a ratio. So what I want to sort of explain is, when you trade, right, you should have more than one trade setup that you look for. And this was a question that someone emailed me on the other day, is, how many trade setups do you have? Well, I've got a handful, okay, but really what I'm looking for is my bread and butter, which is ratio and divergence, and a newer one that is made a lot easier is the prominent point of control and a ratio. And it's something that you can see if you use my Orderflows Trader software. Again, people say, well, you don't watch his videos because all he does is talk about his software and you got to buy his software. Well, that's one of the reasons why I create these videos is for users of my software so they can look for the same trades, right? And I talk about these setups all the time, ratio and divergence, or divergence and a ratio in the next bar. So here, if you're just trading ratio and divergence, this one fails. Okay, you would be stopped out, period. There's no way around it. I'm not going to say, well, you would get out here because it looks like, no, you'd be stopped out. But then down here, if you're trading ratio and divergence, right, you got your divergence and your ratio in the next bar, and the market, made a nice little rally. But, the other setup, right, to get you in just before the divergence and the ratio in the next bar is the divergence and the prominent point of control. Divergence and prominent point of control. Now, I've been doing a lot of videos on this recently. Webinars over the last couple months, talking about this particular trade setup. And why you have to have more than one trade setup is because if you're just trading one setup, right, maybe you get one trade a day, 2 days, 2 trades a day or something like that. Okay, well, what are you going to do the rest of the time? The market's trading, right? You're going to be missing a lot of trading opportunities. That's why you need to have more than one trade setup. And so, okay, you get this trade here, right? Ratio and divergence, you're stopped out. You took a loss, okay? Ratio and divergence, yeah, you got another trade a few minutes later, and, it kind of worked out. You would have got something out of it. But ratio and, divergence and a prominent point of control is giving you another trading opportunity right here. So, everyone always, investing, you always say you got to diversify. In real estate, you got to diversify. Even people, I got a buddy that sells sports jerseys on eBay, and I just remember scratching my head and saying, what else do you sell? He says, well, no, it's good, because these are autographed jerseys and they sell for a lot of money. Well, okay, well, what happens when people stop buying jerseys? They don't want to buy jerseys. It's not like, there's a big market for an autographed, Alex Rodriguez game-worn jersey, because there's only a certain amount of fans out there that'd be interested in it. You satisfy that market, or, there may be one guy looking for that a month or something like that. So, and if people stop, if the guy comes out and says, yeah, I was juiced up my entire career, no one's going to buy his jerseys anymore, and you're going to be stuck with all these jerseys. And it's the same thing with trading. If you have just one trade set up, meanwhile, the rest of the market's trading, and you don't have anything going on because you're just sitting there staring at your screen waiting for the trade setup to come. That's why you need more than one trade setup. And it's especially true in the sense that you need, lots of times I see people, they have this method of trading that deals with range-based trades, markets that's consolidating. Well, what are you going to do when the market's trending, right? You're going to be taking a lot of losses. Or if you have a trending market, you have a market way of trading the market. When the market's trending, what are you going to do when the market's consolidating? You're going to be sucking wind. So you need, different trade setups, based on market conditions, or just basically how many trades you want to take a day. And so first one is a loser, right? You're gonna sit there, I'm gonna say, wait for the next trade, and the next trade never comes that day because you're just looking for one trade setup. That's why you need more than one trade setup. And divergence and prominent point control, and you would have got also the divergence and the ratio in the next bar as well. So at least you're giving yourself a more opportunities. But where else is there a divergence and a ratio this day? There's no more, And even here you get a divergence and a prominent point of control and another nice trade, 28.28 all the way up to 28.38. Now I'm not saying you would have bought at 28 and got out at 38. But, this is a nice rally up here. I mean, there's nothing going against it telling you to get out. It's all aggressive buying. It's all imbalances in each bar. It's all positive deltas. The first sign of selling coming in here is not up to the 36 area, where you start going sideways in here, where it starts getting a bit chunky in here, and you got the selling imbalance. So hopefully you could have got, at least 5 full points out of that move. And that's what I talk about when I say, you got to have more than one way of approaching the market, rather than just saying, well, I got a way of trading the market, when it's consolidating, because we consolidate 70% of the time, and we only trend 30% of the time. Well, okay, well, the 30% of the time you're taking losses, or you're not making any money. So it's one of those things, you need something that is for different market conditions, you need different ways to approach the market. So anyway, so thanks for watching this video, and if you're interested in the software, go to orderflows.com. And I've got a link actually below this video for a special on the software. If you're interested, it's a great little tool to add to your training. Again, we do these weekly live group training sessions, which are more in depth than these quick little videos I shoot for YouTube, and it gives you a chance to interact with me on a live basis. And it's only for those that use my software, or use the NinjaTrader version, or if you have the emoji trading version, which comes from Lee, who I work with on order flow analysis. He has them for the Sierra charts version of order flows. Just shoot Lee an email, and he'll get tell him that, hey, I saw Mike's video, I can get access to it, to his weekly training. Ask Mike to set me up. Because I gotta get the approval from Lee that you are a user, and it's an informal thing. You could ask your questions to me about order flow, or what I think is interesting to look at in the market, or why is something set up a certain way. Feel free to join. I said it's a great resource for anybody interested in advancing their knowledge of order flow. I mean, if you're just someone that's going to say, well, order flow is the secret, I want to learn it and I'll know everything about the markets. No, you need to learn how order flow affects the markets and why it happens. So thanks everyone, and have a great day, and hope to see you on the live sessions on Monday. Bye-bye.